And today we got new numbers showing just how few Americans can now afford to buy a home. Diana Olick is here with the latest, and it sounds like it's time for the 40-year mortgage, Diana.
Yeah, maybe, Kelly. Look, we all know both home prices and mortgage rates are high, but the change in who can afford to own a home in just the past 6 years is pretty stunning. A new report out today measures affordability for buyers using a 30-year fixed mortgage and putting 30% of their income into the monthly payment, including mortgage, property tax, and insurance. That is the share lenders like. Now, just to start, the median household income in the U.S., or dual income, is about $78,000 a year. So know that for the start. Now, for those earning between $75,000 and $100,000 a year, which would be middle to upper income, just 21% could afford to buy a home in March. Compare that to 49% who could afford it in 2019. Now, in a so-called balanced market between buyer and seller, that group should be able to afford 48% of all listings. But given the current supply of homes for sale very low, the market would need roughly 416,000 more listings priced at or below $255,000 to be a balanced market. Now, for those earning below $75,000 annually, the market is even less supplied. A home buyer with a salary of $50,000 could afford barely 9% of available listings. Now, in 2019, they could have afforded 28%. Higher income households have near total access to the housing market. Home buyers earning $250,000 or more can afford at least 80% of home listings. So good for them. But now, the good news side on this is that a lot more supply is coming onto the market, and we're starting to see more price cuts. But it is going to take a lot to see affordability improve anytime soon. Kelly.